Okay, we can't ignore the elephant in the room. Bitcoin has tested $65,000 today, and even though the price has now bounced back to $67,500, everyone is panicking. But let's take a sober look at what's really going on and what to expect. Firstly, against the background of the Iranian conflict, Brent oil is already at $115. The indices of Asian stock exchanges fell, inflation is rising again, and summing it all up, it is logical that the crypt is the first to get fluffed. Here's what I think is much more alarming signal. The number of long positions on Bitfinex has reached 79,000, and this is the maximum since November of 2023. And I would like to think that the crowd will predict the future, but as practice shows, when there are too many longs, the market punishes them. And I'm afraid that most likely they will really be eliminated. In the short term, I consider a price drop extremely likely. The hope for a quick rebound is not justified. Any further deterioration of geopolitical situation will bring down the Bitcoin on the same day, and therefore I consider any long with leverage above 3x unjustified. But with the spot, everything is completely different. Vilivu says the bottom is around 46 to 54,000. Zhao Vetsen says around 50 or even lower. So most other analyses have similar predictees, and there is not even a question of any 10,000 right now. And now it seems reasonable to accumulate spot while also buying with a further decrease as well. And you know what? I think we'll see at least 100,000 before the end of the year, and that's my reasoning. Listen up. So first, the Fed cannot keep the rate high forever. The US economy is already suffering, and sooner or later, they will start to decrease. And when that happens, liquidity will flow back into risky assets. Second, any outcome with Iran in long term is beneficial to Bitcoin. With an escalation, money will be printed in the United States, and with the truce, oil will fall. Either outcome is favorable for Bitcoin. The third one, institutionals did not leave. BlackRock, Fidelity, all these guys continue to build the infrastructure. ETF inflows may be sluggish right now, but as soon as things get easier in geopolitical terms, they will resume. We can also mention the influence of the recent halving, but objectively, it seems secondary to me now. I don't know where exactly the bottom will be, and I see no point in guessing, to be honest. Maybe it's really 65, maybe 50. After 6 months or a year, it shouldn't matter anyways. My strategy right now is really simple. I'm gradually accumulating spot futures only if I see a clear signal and not because it may suddenly bounce off, and there is no such signal right now. Hello everyone, you're on Alice Daily Crypto, channel with a daily analysis of crypto news, and in just a second we will move on to the most interesting events of the weekend. But before that, I want to remind you that your likes really help the channel grow, and subscribing will help you specifically not miss the next video. Prediction markets scaled to USD 21 billion in monthly volume of 2026. Let's take a break from crypto ludomania for just a second and take a look at the classic one. The monthly turnover of the forecast platforms exceeded $20 billion, and the number of unique wallets tripled to 840,000. The main drivers, of course, are the geopolitics, obviously. The contract of the US strike on Iran raised $73 million, and on February 28, Polymarket set a daily record of $425 million, beating the maximum of 2024 presidential election. To be honest with you, I think that if you don't have insider information or some sort of mathematical system, then trading in prediction markets is just the same as gambling. The only adequate approach seems to me to be from Vitalik Buterin, who's betting on events that are impossible to happen. And in all other cases, it seems easier to just tickle your nerves by spinning the roulette the old-fashioned way. Alright, I lied, and there is another option for adequate trading in the prediction markets. If you can find an edge about the platform itself, it's a sin not to use it in your favor. A smart trader on Polymarket turned $500 into $700,000 by guessing the movement of Bitcoin. Except he was not guessing it. He saw that Polymarket was publishing the price with a delay relative to TradingView and CryptoQuant. So he wrote a simple script that automatically opened positions before the price was published and made a fortune without risk. Great job. Bitcoin miners are becoming AI companies and selling their Bitcoins to fund the transition. Not everything is so smooth and rosy among the miners. The cost of mining Bitcoin from public companies is $80,000. And mind you, Bitcoin costs 65 right now. And that is minus 15 grand from each coin. And obviously, mining at a loss cannot be done for like a really long time, Therefore, they're massively switching to AI infrastructure. Core Scientific, TeraWolf, and Hut 8 all are moving, and by the end of the year, up to 70% of revenue will come from AI, not mining. And it's really bad and sad that they finance this reversal with debts and sale of Bitcoin. Miners have sold more than 15,000 Bitcoin since the peak. Over the weekend, the first full-fledged documentary was released on my channel in which I told the whole history of Bitcoin from the day it was created. And if you really want to understand how events in the world affected the price, how ordinary people and major players reacted to it, I definitely do recommend you to take a look. Strategy may have paused Bitcoin accumulation last week, ending a 13-week buying streak. So Strategy, which has been buying Bitcoin for the past 13 weeks in a row, seems to have taken a break for the first time since December. And over the weekend, Michael Saylor did not publish the traditional orange circle or a buy signal, but instead he talked about privileged stretch stocks. In 13 weeks, the company bought 90,831 Bitcoin, bringing the total reserve to 762,099 Bitcoins with an average price of $75,694. And now Bitcoin is trading below 67,000, and apparently even Saylor has run out of money or something. Strategy shares are still 76% below all-time high. The pause may be due to the fact that the company has just exhausted the limits on issuing shares to finance purchases, or simply just decided to wait until the market comes down, or maybe Saylor himself, looking at Willy Woo's forecast of the day at 46 to 54,000, just decided to wait and buy more profitably. In any case, this is the first break since December, and the market, accustomed to weekly injections from the main institutional whale, may perceive this as a signal for further decline. And maybe that's actually exactly what he wants. But in any case, that's it for today, and I will see you tomorrow. Bye!